Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Equities are having a time of their own with the US indices hitting fresh all time highs, even amidst the geopolitical uncertainties and the recent commentaries by Fed members pushing back against the March rate cut. Meanwhile, Chinese equity watchers this time around will be keenly watching consumer spending patterns during the holiday season. But let's focus on the event of the day, which is the RBI's MPC outcome. Now, it's widely expected that the rates will remain unchanged, but let's understand the intricacies from JK. Morning, JK. What are we expecting from the RBI ahead of the MPC outcome? Keen to hear your thoughts.
Uh, Good morning, Swaraj. I think markets are actually quite rangy in the currencies. Even the bond market has not been moving much after quite a bit of volatility post job numbers. And the equities are, of course, on their uptrend. For India, of course, equities are also trading close to their all-time highs, not very far from there. But they need further, some sort of impetus for further move up into fresh highs, and that's what market may be looking forward to in the RBI meeting today. Although there is a consensus that there will be no change in the policy repo rate of 6.5%, and this move was almost a year back in February 2023. Uh, when they keep it unchanged, the factors that they will take into account will be the inflation generally staying above 5%, while their target rate is 4%. The fact that major central banks are in no hurry to cut rates, though moving in that direction. Robust growth of the Indian economy does not require additional monetary support, at least for now. So, if anything, RBI would be mindful of the elevated fiscal spending, most likely in the rest of the financial year end and in the run up to the general elections in April, May. However, taking into account the recent tight liquidity conditions, RBI might change their stance from one of withdrawal of liquidity to neutral stance. Now, besides the policy rate and stance announcement, we will also look forward to the revised inflation growth projections, particularly the latter, in view of the recent interim budget, which again allocated significant amount for capex. In the last meeting in December, RBI had projected GDP at 7% for FY24 and inflation at 5.4%. I do not expect much change to these projections. Overall, monetary policy does not generally have a big impact on the rupee, and this time it's unlikely to be different. Rupee's moves in the last 2 days have been very steady in a small range, but some strengthening bias again seen on the back of good inflows from corporate fundraising, bond issuances, etc. Although state-run banks were back in action yesterday at the lows and not allowing rupee to run away. Traders were content to be on the sidelines ahead of the RBI meeting, hoping for some surprise to move the market. Now, even in the global market, the dollar has not been moving much. It's been rangy, but our dollar has given up some of its NFP-inspired gains, and dollar index has come down to around 104 and staying there steadily. We had very little data yesterday, German industrial production that was lower than expected. We also had trade numbers from the US, which was again almost like last month, but some interesting points. Goods trade deficit with China was at the smallest level since 2010. And then that declines, that reflects a decline in imports from the world's largest exporter. And that will be quite welcomed in Washington. As a share of GDP, goods deficit with China came in at just 1%, the lowest level since 2002 also. By contrast with the trend in China, US goods deficit with Germany, Italy, and Netherlands and few others have soared to new highs. So basically, a shift in US from China to other countries, and the over dependence on China is definitely on the other decline. The other point of data was, of course, the Chinese inflation numbers. The consumer price index for January fell to 8%, sorry, 0.8% year on year, the fourth consecutive fall, and the steeper than minus 0.5 drop that was expected. On a month-on-month basis, it rose 0.3%, once again slower than compared to 0.4 that was expected. So the deflationary situation in China is continuing. China is getting into a long Chinese New Year holidays, almost a week starting tomorrow. Chinese yuan has been somewhat stabilized near 7.20, but despite several measures that they have announced and also indications that authorities are working out more for supporting the markets, Chinese yuan has not really gained much, and investors are really very, uh, you know, keen to see some serious reforms rather than just policy short-term policy changes which are working like a band-aid for an economy that requires big reforms and changes. So that is the situation as far as China is concerned, and in the global market, stocks rose, taking more influence from corporate earnings. That has not been very disappointing. The S&P 500 made new all-time highs, although closed just below that. Global Composite Index also closed at two-year high. Now, all the three indices in the US rose. Now, as I said, dollar has been rangy, but underlying trend seems to be some more strength for the dollar based on the yield advantage as well as the strength of the US economy. But to get a move on the dollar, we need some trigger. I think we may have to wait till tomorrow's CPI revisions and followed by CPI monthly report next Tuesday. Till then, of course, in India, we will watch the RBI statements today and how the markets react to it. Thank you.
Thank you, JK. And just quickly summarizing, for the RBI meeting, there is no expected change in policy rates, which currently stands at 6.5%. And the fact that major central banks are in no hurry to cut rates will also play out. One important thing to note is that recent tight liquidity might lead to a minor change in stance, which is from withdrawal of accommodation to a more neutral stance. And of course, RBI's projections during the MPC will matter, though it seems it shouldn't change to a large extent. In the global markets, currencies have been rangy, equities have been bullish, and dollar definitely has lost some gains which it experienced post the NFP. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.